Good afternoon and welcome. I'm Mike Whitaker with Nationwide Marketing Group, and we certainly appreciate you coming to join us this afternoon for what promises to be a very valuable and information-rich webinar. We are very happy to be partnering with Intuit to bring you this piece, and we've got a lot of content coming for you in the next hour and a half. I will tell you that all attendees are on mute at this point, but you're more than welcome to submit your questions throughout the webinar through GoToWebinar's portal. You can submit those in and we'll ask the most frequently asked questions to our presenter at the close of today's call. Now, with that said, I would like to introduce our presenters and then let them get started. We do have Lexi Carell with us today. Lexi's a licensed CPA and the founder and CEO of UniFi, which provides outsourced accounting and bookkeeping solutions for clients around the world. With her extensive experience in the accounting industry, she's helped hundreds of businesses across all types of industries improve their accounting practices and reporting. We also have Tyler Ringquist. Tyler spent the past 15 years working with small to medium-sized businesses, assisting them in finding the right accounting solutions for their unique needs. Tyler has a very broad knowledge of Intuit's products and services, and he's worked in several business units with Intuit, including both QuickBooks Desktop and Online, Enterprise, Payroll, and Merchant Services. Currently, he's the account manager for Intuit's Intuit's partner accounts team. So with that said, again, we certainly appreciate you being here, and we'll turn things over to Tyler. Tyler?
Thank you, Mike. Appreciate that. And thank you guys for the opportunity to be able to present here. I know you're all here to watch Lexi's presentation, which is going to be very beneficial, but I also wanted to announce the partnership that Nationwide and Intuit just started this past year, and what that means to you guys as members. Means a few things. One, you can still use our same exact products and services that you have today, but now you're going to have a dedicated account manager, and you'll have exclusive pricing and promotions even on current products and services that you have. I've already worked with 50 to 100 Nationwide members and have been able to save them all money on products that they're currently using and upgrading some different things where needed as well, all at a discounted rate compared to what you'd find on our website. Additional escalation paths. So if you guys have a severe support case or something that's just not getting solved, you can always bring it to me. I won't know the answer, but I'll know who does. So I'll help triage those accordingly. Then we do additional things, just training materials. If you have a new person or bookkeeper come in, we can get you training packages to get them up to speed and things like that quicker in QuickBooks. And then additionally, we try to do different conferences. I was at the Houston conference just a couple months back, putting on webinars like this and supported by our partners, Lexi with UniFi. Very easy to subscribe or make sure you're with the partner channel. Just reach out to me directly, or if you go on MemberNet and look for Intuit or QuickBooks, you'll find our information and all the links and my calendar invites and you name it. So with that, I'm going to turn it over to Lexi and we'll get to the main course here.
Excellent. Thank you, Tyler, and thank you, Mike and Nationwide, for having me here. I'm really excited to be here with you guys and to spend the next hour and a half talking about the PPP. It is the hot topic right now, and I'm sure that you've been reading and researching and sitting on webinars, and so excited to have you here today and looking forward to diving into this topic. So our agenda today is to cover three main components of the PPP. So first, we're going to be looking at compliance with the PPP. So congratulations, you've received the PPP, and now you are subject to certain compliance requirements, and so understanding those is critical with these loans. So we'll be looking at a few of the different certifications that get made, the necessity certification, the use certification, as well as one other of those certifications. We're also going to be talking about PPP Forgiveness, which is on the forefront of everyone's minds right now, understanding those requirements and understanding what the documentation is going to be, what documentation will be needed, as well as what that application process is going to look like. And then we'll finish it off by PPP Accounting, looking at actual ways to record the transactions for the PPP loan, forgiveness, accrued interest, and excluded expenses. What is that actually going to look like in QuickBooks? So we're going to walk through that process in a very detailed way as well. So we have lots to get through in the next hour and a half. And as mentioned already, we will be covering questions at the end. So, make sure to submit those, and then we will cover those once we get through all of this content. Before we dive in, we do have a brief disclaimer here that this presentation has been prepared strictly for informational purposes. The information presented in these materials should not be considered legal or accounting advice and should not be substitutes for legal, accounting, or other professional advice in which the facts and circumstances may warrant. We do encourage you to consult legal counsel as it pertains to your unique situation and with any specific legal questions you may have. Unless otherwise noted, the opinions expressed herein are current opinions and are subject to change without notice. The information contained in this presentation is intended for the sole use of those subscribers to the webinar at which it is presented. So let's talk about PPP compliance. And so the SBA and the federal government drafted the CARES Act with this program for the purpose of providing immediate and quick aid to businesses. And so with that, they drafted this bill, which included the PPP program. It has a lot of requirements, a lot of regulations. It means a lot of money for a lot of people, and they cranked this thing out quickly. And this bill was only passed not even 2 months ago. And so there was a lot that was pushed through quickly. There was a lot that was not very clear in the original bill itself. And so a lot of professionals have been trying to decipher and interpret exactly what is meant, what is required to be in compliance. And so we're going to talk a little bit about that. But ultimately the reality of the PPP loan is that it was pushed through so quickly. There is a lot that's unclear. And so in some areas, there are going to be different interpretations. And so we'll kind of talk about that as we go through this as well. So with PPP compliance, there was a series of certifications that were made in the PPP application. And so what is a certification? Basically, it was a series of guarantees that were made in good faith by you, the loan borrower, to the federal government. And so these certifications were located on page 2 of the application and then also reiterated in the final promissory notes as well. And so these are, should be taken very seriously as guarantees that you personally made to the federal government in relation to these loans. And the other component to consider with these certifications is that the third-party verification that typically accompanies this type of loan with the SBA is relieved for lenders. So typically, lenders are required to verify the information submitted to them by the borrower on behalf of the federal government. And in areas where they are incorrectly verify that information or anything like that, the bank would oftentimes be held liable for those. In this instance, that requirement is removed by the CARES Act. So lenders are relieved of this normal obligation to verify the loan requirements and will not be held liable for any failures for the certifications to be honored. And so you might recall this section of the PPP application where you would initial each one of these certifications. And so these are the certifications that we're going to be talking about. I would highly recommend going back and rereading the entire PPP loan application as well as your promissory note to understand the certifications and requirements that you agree to in these documents. So the first one we're going to be looking at is called the necessity certification. You may have been hearing some about this. It states that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And so you may recall a few weeks ago that the first round of PPP loans went out, and there were a few organizations that got the PPP loan, such as a basketball team and a hedge fund and a Ruth's Chris Steakhouse, and these big companies that had other means of funding their operations, or had sufficient capital already to fund operations. And so it kind of became a big publicity problem. And so it was addressed by President Trump and the administration pretty directly. And so in response to kind of that situation, that environment, the SBA did release an FAQ specifically to this certification. And to give you a little bit of background on what these SBA FAQ questions are, is that these are questions that have been submitted to the SBA by lenders or other organizations that they then respond back to. And so this does not constitute legislation, right? The SBA cannot legislate or enact laws. However, the SBA was given authority through the CARES Act to interpret these laws. And so though these SBA FAQ questions are not law, they do carry some authority. And so they should be reviewed and considered. And a lot of the additional guidance that professionals are getting on how to handle the PPP loans are coming from these SBA FAQ. And so the SBA issues these in conjunction with the Treasury. And so they together kind of formulate these responses. And so they are not legislation, but they are authoritative. And they are getting updated almost daily. So I'd say, every day or every other day, more FAQs are being updated to this document. And so it's a great resource to be looking at and reviewing. And what I've done is I've included a screenshot of this question here. So I don't know if you're like me, you've been sitting on a lot of webinars and hearing a lot of information about the PPP and what's being done. And depending on the webinar you're on, you might hear one professional say one thing and another professional contradict it. And that's just kind of the nature of this loan getting pushed, or this program getting pushed through so quickly, and so many different interpretations of what is somewhat vague language. So what I've tried to do in this presentation is, as much as possible, inserted the actual authoritative documentation so you can see that for yourself, read it for yourself. And then as well, at the end of the PowerPoint, which will also be made available to all attenders, I've included links so that you can directly access some of this authoritative documentation yourself. And then also, I would recommend reviewing and checking in on these SBA FAQs regularly. It's part of my morning routine to log in and see if they've added any more FAQs to this document. So that link will be there, made available for you as well. So back to the necessity certification. This is question number 31, and it was issued on April 23rd. The question was, do businesses owned by large companies with adequate sources of liquidity to support the business's ongoing operations qualify for a PPP loan? And their response here is, specifically, before submitting a PPP application, all borrowers should carefully review the certification that economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Borrowers must make this certification in good faith, taking into account their current business activity and their ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that is not significantly detrimental to the business. And so this was very clear. And so you might be looking at this and saying, okay, well, this is for large companies. They're even referencing specifically public companies in this FAQ. So subsequent to this FAQ, they did release FAQ 37, which asks, do businesses owned by private companies with adequate sources of liquidity to support the business's ongoing operations qualify for a PPP loan? And in this FAQ, they referred back to the original question that we just looked at, stating that basically the same requirements they're holding to public companies or to large companies, they're also holding to private companies. And so this made a lot of PPP borrowers very nervous, because that means, if I had sufficient capital for, say, the next 3 months, 5 months, 6 months, is that going to be considered an adequate source of liquidity? If my business is not subject to a full shutdown, and we're able to be open partially and our sales are still continuing and we are somewhat able to still cover payroll and wages and rent and all that stuff, are we committing potentially, fraud to the federal government for having taken a PPP loan and stated this? Initially, it was kind of understood that every business had economic uncertainty in the face of what's happening in this pandemic. And so this created a lot of concern for a lot of businesses. Thankfully, the SBA provided more clarification recently, this week, 2 days ago, on Wednesday, they provided and released FAQ 46, which is going to be a lifesaver for a lot of businesses and provides a lot of assurance here that how will SBA review borrowers' required good faith certification concerning the necessity of their loan request. And essentially what the SBA and Treasury have done is that they have issued a safe harbor stating that any borrower that, together with its affiliates, receive PPP loans with an original principal amount of less than $2 million will be deemed to have made the required certification concerning the necessity of the loan request in good faith. And so essentially the SBA has released that, we want to focus our audit and review efforts on loans that are over $2 million. And the SBA and Treasury have specifically stated that they will be reviewing and auditing all loans over $2 million. And so this does not necessarily, essentially, if you receive that loan for under $2 million, it's going to be deemed that you received that you made this certification in good faith. But if you did issue or receive a loan over $2 million, you will be subject to an SBA review for compliance, and you may still, of course, be able to make the certification in good faith. They will want to see documentation showing that. So it could be cash flow projections, documentation on, what other kinds of indebtedness were available to you at the time, and so on. However, if a company who has received over $2 million is unable to provide an adequate basis for the certification, the SBA will seek repayment of the loan without forgiveness. And if returned, the SBA has said they won't pursue administrative enforcement. And so that's just something to be aware of and to plan for. I believe the majority of participants on this call are under that $2 million mark, but a few are over. And so making sure that you are able to provide documentation and keep that documentation will be critical. Another certification that gets made on the PPP application and also in the promissory note is the use certification. And that states the funds will be used to retain workers and maintain payroll or make mortgage interest payments, lease payments, and utility payments as specified under the Paycheck Protection Program rule. I understand that if the funds are knowingly used for unauthorized purposes, the federal government may hold me legally liable, such as for charges of fraud. So initially, I know a lot of businesses and our clients were thinking, oh, this is great, PPP funds are coming in, I can refinance this loan, I can take a distribution, and had some other ideas on how they wanted to use the PPP funds. And we've been directing back to this certification that there are very specific requirements on how these funds can be used, and it will be your responsibility as the borrower to document proper use of the funds to be in compliance with this certification. And so eligible expenses are detailed out right there in the certification to retain workers and pay payroll, mortgage interest, utilities, rent, and lease. And those last three are going to be only for those that were in place before February 15th. So the common question is, can deviations from the use restrictions be made? And so a lot of groups are lobbying to change this restriction. However, changing this restriction would require an act of Congress. And so as of right now, these are the requirements. The recommendation would be to not deviate, and deviations could potentially raise red flags with both your lender and possibly the SBA and Treasury. And so the recommendation at this point, based on the law, use the funds for the specific items that it is allowed for. Another certification on that page of the application is the single PPP loan certification. So during the period beginning on February 15th and ending on December 31st, 2020, the applicant has not and will not receive another loan under the Paycheck Protection Program. And so this is another one that could potentially happen accidentally. I know that a lot of our clients, when the PPP funds got renewed, or even in the first round, they started applying for that PPP loan. And a lot of our lenders were saying, you know what, we may not be able to get you funded before funds run out. So you may want to try other lenders and, with us and make multiple applications. And so we had a number of clients that were making multiple applications to multiple lenders. And so it could have potentially accidentally happened where you get refunded the PPP loan twice. So the recommendation would be, if you have any pending applications out there, to cancel them upon approval of the PPP loan, just to ensure you don't accidentally take those funds twice. And if you do, speak with the lender, return them immediately, and you'll be fine. We've also been seeing that in some cases, businesses have been getting funded the PPP funds without signing a promissory note. So it could even be that you filled out that initial PPP application with maybe multiple lenders, and we've been seeing some lenders just fund that money without any additional signature and authorization after that initial application. So just being aware of that, you may not necessarily get that official promissory note from a lender, even though that is certainly something you would want to have in place. And if you didn't get a promissory note with funding or before funding, that would be something that would be, excellent to follow up on with your lender and make sure you get that in place. Affiliated businesses. It's also unclear if multiple loans for multiple businesses are acceptable. There are some specific exceptions that have been made within the PPP rule for franchise industry, for businesses receiving assistance from a small business investment company, as well as for food and hospitality. However, beyond that, no specific exemptions have been made. So it's unclear how that will land for multiple businesses. So it would be recommended to look into that further and discuss, any of those types of issues directly with your legal counsel, with your bank, with your lender, and make sure that you understand exactly where you land if you have multiple businesses that you've applied for PPP funding under. Alrighty, so that is compliance with the PPP. So moving along, we're going to start and shift our focus onto PPP forgiveness. And so this is the hot topic. Everyone wants to know, how do I get forgiven for this loan? I want to maximize that forgiveness. And there are a lot of questions on exactly what qualifies underneath that. What kinds of expenses are included? How do we calculate, our, the number of employees that we need to maintain, and all kinds of things. And so we're going to dive into a lot of detail on how to actually complete some of those calculations in this next section. So underneath the PPP program, there are 4 determiners for forgiveness. And I'm sure everybody on this call knows these, that yes, we understand there's the 8-week period that eligible expenses must be spent. There is the 75-25 rule, so a minimum of 75% must be spent on payroll. And the remaining 25 can be spent on other eligible expenses. And then there is that retention ratio, that the same number of employees must be maintained. And this is one that is kind of creating some problems for people as well. And number 4, the consistent pay, that there must be maintained at least 75% of the total wages from prior period at an employee level. So we're going to dive into each one of these components, these determiners, and the more you're able to fully comply with each one of these, the more likely you will be to receive 100% forgiveness of the loan. So starting off with that first determiner, the 8-week period. So the 8-week period begins the day the funds are received. As of that day, you have 8 weeks or 56 days from that moment to be in compliance with the spending requirements. And so I know this is one topic that is creating a lot of issues for businesses, and rightfully so. In some instances, you might be subject to a government mandated shutdown. You may not be able to bring employees back to have them do anything. Could be that the way your pay dates fell and when you receive that money is just off, and now it's creating a problem there. So there are a lot of issues that have come up with this 8-week period, and various groups have, such as the AICPA and other lobbying groups, have made recommendations and suggestions to change this. However, in order for this requirement to be changed, it will also require an act of Congress. This was included in the original bill, and so any changes to this is going to require Congress to make that change. And so the recommendation at this point is, don't wait for the change to occur. Use it in 8 weeks. And as of now, there haven't been any exclusions or exceptions made for businesses who are subject to a government mandated shutdown. That they said 8 weeks, and they really mean 8 weeks as of now, unless Congress passes a bill that will change it. So that 8-week period, again here, we're kind of referencing back to the SBA and Treasury's FAQ list here. And so number 20 was released as it relates to this specific issue. So the amount of forgiveness of a PPP loan depends on the borrower's payroll costs over an 8-week period. When does the 8-week period begin? And so the SBA and Treasury, even understanding that, yes, we know it coincides with payroll and all of that, they answered that the 8-week period begins on the date the lender makes the first disbursement of the PPP loan to the borrower. So that means if you got multiple disbursements of that loan, it's the date of the first disbursement. If you receive PPP funds without a promissory note, it still means that the date of the disbursement is when your 8 weeks begin. So the lender must take the first disbursement of the loan no later than 10 calendar days from the date of the loan approval, the remainder portion of that answer there. So the SBA and the Treasury, they're at this point, they're very clear on what that 8-week period is. And so if the best thing that you can do to try and guarantee full forgiveness is to comply with that 8-week period, and that's 56 days from the day that you receive the first disbursement. So the PPP forgiveness, that second determiner there is the 75-25 rule. And so with that, and this is something that everybody's very aware of, that we need to spend at least 75% of total loan funds on payroll costs. But what qualifies as payroll costs? And so directly out of the SBA PPP interim final ruling, I've detailed out what that specific document states as payroll costs. And again, for this PPP interim final rule, I've also included a link in the PowerPoint so you can go directly to this authoritative document yourself and read what the actual language says. Because again, there's a lot of misinformation out there. The information is changing constantly. So going back to the actual original authoritative documents is going to be so helpful to make sure you're actually in compliance. And so this final rule states that payroll costs include salary, wages, commissions, or similar compensation, cash tips or the equivalent based on historic records or a good faith estimate, vacation, parental, family, medical, or sick leave, allowance for separation or dismissal. So if within these 8 weeks, you unfortunately have to terminate an employee and you have to pay them severance, according to this final rule, that can also be included and considered payroll costs. Employee benefits, then that is specific to group healthcare coverage, insurance premiums, and retirement, as well as the employer, state, and local taxes assessed on employee wages. And so some things that are specifically excluded from payroll as it pertains to the 75% rule are wages to non-US based employees. So if their principal place of residence is outside the US, their wages do not count towards the 75. Cash wages over $100,000 annually, and that will be prorated to the 8-week period. So that means that no employee can receive over $15,384.62 within that 8-week period, and anything above that will be excluded from the 75% minimum rule. And that is specific to cash wages to the employee. So if that employee is receiving other health benefits or retirement or things like that, that's not limited to that cap. So it's just the cash wage portion to employees that's limited to the $100,000 annually, prorated to the 8-week period. Employer federal payroll taxes, and so that'd be the employer federal payroll taxes assessed on employee wages, as well as payments to 1099 contractors. 1099 contractors were directed to apply for the PPP loan themselves directly through their lender. So they would be able and eligible to get PP loans themselves, and therefore are not included as payroll under the 75% rule. Additionally, owners' distributions and guaranteed payments are excluded. Some exceptions apply for sole proprietors and other Schedule C filers, but generally, owners' distributions and guaranteed payments are not considered payroll and will not be counted towards the 75% rule. Individual health plan and HSA for owners and families also will not be included, and that's that's the understanding at this point. If there's an individual plan being paid for the owner, that is excluded. However, if an owner is included under a group plan, that is allowable. So it's just the individual plans to owners and their families that would be excluded from this. as well as wages claimed under the Families First Coronavirus Response Act employer tax credits. And so you may remember that before the CARES Act was the Families First Act, and under that act was a requirement for employers to provide paid leave to certain employees affected by Corona. And so under that, there are also some tax credits that are available to help cover that paid leave. And so any wages that are claimed under that act for those tax credits are excluded from the PPP 75% rule. So you can only claim the payroll once, either under the employer tax credits or under the PPP. So I did put in here a little bit more clarification on an issue that keeps coming up with our clients as a little confusing related to the federal employer taxes. We've gotten a lot of questions and there's been a lot of misinformation out there about the federal payroll tax component of payroll. And there was some, and originally too that the bill itself was a little unclear on this. I read it myself and it does read and to make you think initially that the employee portion of federal taxes withheld from their payroll is also excluded. However, that is not the case. So only the employer federal taxes assessed on gross wages that are payable by the employer are excluded. So employee federal withholdings are not excluded. They are considering gross wages for purposes of the 75. So any employee deductions are not excluded from the 75 rule. Gross wages are claimed, and it's only the employer payroll taxes that can be included as are the only employer payroll taxes that can be included in the 75 are the state taxes assessed on gross wages. So whatever state taxes you have assessed on your employees' wages, those can be included in the 75%. It's just the federal assessment that cannot be included. And so here I put in the Treasury PPP fact sheet, also a link for this for you in the PowerPoint, so you can check this out for yourself, where they detail out, the Treasury details out what they view as what counts as payroll costs. And in here you can see that they specifically state that what can be included are state and local taxes assessed on compensation. And under that first bullet point, salary, wages, commissions, or tips, it does not state anything about it being net federal tax income withholdings or anything like that. And so it's very clear we're talking about gross salary, wages, commissions, and tips, and the only payroll taxes that can be included on the employer side are state and local taxes. So just wanted to add a quick note on that because there's been a lot of confusion. Some other considerations with the 75-25 rule and the 75% payroll is to be mindful of how your pay dates fall, that the SBA and your lender will be looking at the pay date, not the pay period end. So be mindful of how your pay dates fall within that 8-week period, and you may need to run an early payroll or a payroll for a partial period, depending on how that lands. And also note too that more than 75% can be spent on payroll. There's no maximum that is limited to payroll. It's just a minimum. So it's just a minimum 75%. And based on how everything is written, it does appear that 100% of the funds must be spent within an 8-week period. And this is one of those notes where it's not very clear in the legislation what's meant by that, because essentially what they say is you have 8 weeks to spend the funds. You have to spend at least 75% on payroll, and then you have a remaining 25% that can be spent on other eligible expenses. So based on the language, it seems like 100% must be spent within the 8-week period. However, this is one piece where there are varying interpretations and opinions. And so I'd say on this, just be aware. I'd probably say discuss this with your legal counsel, discuss this with your lender for their understanding, and make sure you understand that requirement if you must spend all of the funds within the 8-week period. So the remaining 25%, there is an allowance to allow other expenses to be used with PPP funds, and that is very restricted as well. And so if you had in place before February 15th, the below items listed here, those can be included and be eligible for forgiveness as well. And so that's rent and lease payments, utilities, and there was a little confusion early on what was meant exactly by utilities. And initially it was just electricity, gas, and water was what was considered eligible utilities. Then later there was more guidance added, which also allowed telephone and internet. However, within the SBA rules and documentation, there's also some discussion of business transportation, and it's still not clear on what that means, and essentially we're still waiting on guidance to understand what is meant by business transportation and if that is allowed. And part of the reason why there was so much confusion on utilities is because the PPP itself did not define utilities. Therefore, professionals were kind of defaulting to the SBA's other definitions used for utilities, which is where this list came from. And so as we're trying to get more guidance and understand, okay, is the SBA's general listing of what is considered utilities what's allowed, or are there other specific use restrictions? That's kind of why there's been some, development on what is included here and confusion as well. But as of right now, it is certain that electricity, gas, water, telephone, and internet are all allowable utilities. The next allowable expense is mortgage interest on real property. And so again, this would need to be in place before February 15th, and it's just the interest component of that payment. So it excludes the principal component of mortgage payments to just the interests. As well, wanted to note here that prepayments on any of these items are excluded. So there's no way to prepay rent, prepay utilities, make an extra payment on your mortgage, that is excluded. All right, so moving on to that third determiner, the retention ratio. So of the 4 requirements to be able to be eligible for 100% forgiveness is this retention ratio, that the amount of the amount eligible for forgiveness is proportional to the percentage of full-time equivalent employees retained. And so there's been a lot of questions, what are full-time equivalents? My payroll provider has a report that calculates for me, but are they doing it correctly according to what the PPP requires, and how can I check? So wanted to walk through an example here on how to determine what is a full-time equivalent. So to calculate the minimum headcount, you would take the greater of your employment average for the following periods. And so we have 2 periods that have been laid out as these are the periods we've selected for you to use as your benchmark. And so you're going to calculate the FTEs for each one of these 2 periods, and you're going to take the greater. So whichever one has more FTEs in it, that's the period that you're going to use as your benchmark. That is the minimum employees that you can have for maximum forgiveness. So you would take January 1st of this year through February 15th, or February 15th, 2019 to June 30th. And so that would be taking the 2019 figures. And so for any seasonal employers, I don't think that's applicable here for the attenders on this call, but for any seasonal employers, they are required to use option B here. They have to use the 2019 date range. And again, please note that you would use the pay date, not the pay period end, as the PPP really, everything that they talk about and discuss is on cash basis. So my recommendation in calculating the FTEs, use the pay date within these periods rather than the pay period end. So here's an example of how this would work, and how it would look. So for the retention ratio, you want to calculate the minimum headcount that you have to have during the 8-week period. So here I've just laid out an example, and this is for a bi-monthly payroll for these 2 periods. So you would take each one of those pay dates, you put in the number of FTEs for each one of those pay dates, and take the average. And so here we've listed that out under period A, under period B, and on the average you're going to take the greater and you're going to round that number. So you would round it up or down depending on where it lands, and then take the greater. So under this example, in period A, we have 20 minimum, and under period B, we have 21. So you would take 21, that is your minimum requirement for the retention ratio. The next question is, well, how do I calculate FTEs? If I have a lot of part-time employees, how am I supposed to calculate this? And so within the PPP, there is no specific guidance defining what an FTE is for the purposes of the forgiveness calculation. So essentially, professionals are recommending that we would take reliance upon what was in place for as other definitions of FTE. So generally, most professionals are looking to the Affordable Care Act definition of FTEs to be applied here in the PPP forgiveness calculation. And so that calculation is that part-time employee hours expressed as an equivalent number of full-time employees. So essentially, a full-time employee is 30 hours per week, and you would express part-time employees based on a ratio of 30 hours per week. And so again, well, what does that mean? What does that look like? So we're going to also walk through a couple examples on how to calculate this. And so how to calculate an FTE. So first, you're going to separate your full-time from part-time hours. So 30 hours or more, that employee is going to be considered full-time, and that's a one-to-one count. So if you have full-time salaried employees, you have other employees that are hourly, but they work more than 30 hours per week consistently, then that would be counted as one full-time employee. So then next, we're going to look at the part-time employees. And that is anyone working 29.99 hours or less is considered part-time. And so essentially what you're going to do is you're going to add up all of the part-time hours together and divide by 30 hours for that per week for the equivalent of your payroll. And so here I've put some notes. Depending on how your payroll falls in your payroll cycle, as you're adding up your payroll numbers by pay period, you're going to have a different dividing number. So obviously this makes a lot of sense, right? So if you have weekly payroll, you're going to divide that compensation, you're going to divide those hours by 30. If you have a biweekly payroll, you're going to divide by 60 to get that to that 30 hour per week equivalent. And for bi-monthly, that's going to be a little bit more tricky. So here you're going to have to essentially take 6 hours times the days in the pay period. And again, limiting that to 5, essentially using 5 days per each week to get to the that 30-hour dividing mark for that pay period. And then for monthly payroll, you can use 130 hours as the dividing hour to get to that equivalent. So here's a couple more examples. So here's an example for a weekly payroll. If you add up all of your total part-time hours and you arrive at 120.32 part-time hours, you're going to take your 30-hour equivalent and just divide that. So you take 120.32 divided by 30 hours equals 4.01. And so then that would round to 4 FTEs. And there's a typo here in my PowerPoint, but that number you would round to would be 4. And so that would give you 4 part-time employees that would then be added to your full-time employee count. So right, the first step we took was to, segregate out all of your full-time employees. Those are a one-to-one count. And then you're going to add on the part-time equivalents or the full-time equivalents, and that would be 4 in this instance. Here's another example for a biweekly payroll. So you total up all of the part-time hours. That's 95.5 per pay period. Divide that by 60. That gets you 1.59, and you would round that to 2 FTEs. Here's an example of a schedule that we use for our clients and how we kind of break this down. And as much detail and documentation as you can preserve on how you calculate this and arrive at your numbers, the easier it will be for you when it comes time to apply for forgiveness, and for your lender, it's going to make the process a lot easier. So putting together a schedule like this might take some time depending on how many employees you have, but in the long run, it will really save you time and could potentially help you qualify for more loan forgiveness. And so in this example, we've just broken out columns for each one of these allowed these periods. We've detailed out the employees, their hours for each pay period, and we're calculating their total times, their total hours for each pay period, dividing that by 60 since this is a bi-weekly payroll, and then adding in the full-time employees to arrive at our FTEs. And then in that final column there for each section, taking the average of that row to arrive at the FTE average, and then that would be your number. So in this example, we have 2 numbers that we've arrived at. You're going to take the greater and you round that up. So for the first period in 2019, we have 8.22. That would round to 8. For the 2020 period, we have 8.77. That's going to round up to 9. So you're going to take the greater, you would take 9. So with this, employers are still facing a lot of issues in rehiring furloughed or laid off employees who are refusing to come back, and they're refusing to come back for a number of reasons. So it could be that they're getting more money on unemployment. It could be that they're just not comfortable coming in. There are a whole range of reasons why furloughed and laid off employees are refusing to come back to work. I would make a quick note here that in some instances, employers are still obligated under the requirements of the Families First Coronavirus Response Act, where some employees are entitled to 2 weeks paid leave depending on certain situations. So if you have an employee that you feel might fall underneath one of those categories, I'd recommend discussing that with your HR attorney to make sure that you're in compliance with that act, as well as being able to qualify for this rehiring exemption that's available under the PPP. So on PPP, there is an allowance for employers who try to rehire furloughed or laid off employees, but they refuse to come back to work. And if they refuse, then you may be able to have that employee and their respective wages excluded from the forgiveness reduction calculation. So to be eligible for this exclusion, you would need to provide a written offer to rehire the employee. That offer must be for the same salary, wages, number of hours before they were laid off or furloughed, and you must document the employee's rejection. And so to go straight back to the authority, this is SBA and Treasury's FAQ number 40, where they specifically detail out that this exclusion does exist. So excluding laid off employees whom the borrower offered to rehire for the same salary, wages, and same number of hours from the CARES Act's loan forgiveness reduction calculation. So they will be excluded. This is straight from the SBA Treasury. There is also another rehiring exemption that exists. And so this was included in the Treasury's PPP fact sheet. And however, we're still kind of waiting for more guidance on what this means exactly. And so there was within this fact sheet, there was this note in rehiring that you have until June 30th to restore your full-time employment and salary levels for any changes made between February 15th and April 26th. So it does appear that if you're able to restore your wages and count by 6/30, then the reductions made during the 8-week period will not impact your loan forgiveness. And again, this appears this way. This is all we have on this, and we're still waiting more guidance on what this means exactly, but also something to be aware of. So forgiveness determiner number 4, consistent pay. So employees must be paid at least 75% of gross wages, and this will be determined for the period of what they were paid during Q1 2020. And so essentially they're going to be looking at, okay, what was this employee paid in Q1 2020, and were they being paid at least 75% of that amount in the 8-week period? And obviously employees who are getting paid over $100,000 are exempt from this rule. However, everyone else will be applied to this rule, that they want to see the same amount of wages at an employee level during the 8-week period that was in existence prior to this pandemic. So hourly and commissioned employees. So for these guys, you would take the total pay during Q1 2020 and divide by the total number of weeks in the quarter. So here's a couple of examples for you to help determine, okay, what is the 75 minimum for this employee that I must reach in this 8-week period? And so here I have an example. If you had an employee who made $7,500 in Q1, you would take $7,500 and divide by 13 weeks to get your weekly equivalent of $577. And then multiply that by the 8-week forgiveness period. That gets you to $4,616. And of that, you have to pay at least 75%. So again, there can be somewhat of a reduction, but they want to see consistency and a decrease of no more than 25. So take that amount and multiply that by 75, and now your absolute minimum that you can pay that employee is the $3,462 here. And so the SBA will be wanting to see documentation again that this was fulfilled, and the lenders will be wanting to see that as well. Okay, so overall suggested steps here for determining, okay, well, how do I stay in compliance? How do I maximize my position under these 4 determiners so that I can maximize, the amount of the loan that's forgiven to me? So here are some suggestions that I have. So step 1, make sure you understand where you're going to be landing with this minimum 75% payroll rule. So first, determine your 8-week or 56-day period and the beginning and end date of that period. Then determine what your 75% payroll minimum dollar amount is going to be. So you take your loan, multiply that by 75%, and okay, this is my minimum payroll requirement that I have to make in these 8-week period. And then determine your minimum FTEs and map out your pay dates and respective estimates for each one of those pay dates. So your estimate for payroll eligible costs, and don't forget to exclude that employer federal tax component. To make an estimate for the number of FTEs that you think you can get back for that payroll, and then as well what you know you're going to be able to pay each employee at that 75%, and map that out for the 8 weeks. And make sure you meet the requirements and adjust as needed. And so to kind of map it out, project out your cash flow. How is this going to land? Am I going to make these requirements? Step number 2 would be the other 25% of eligible expenses. So whatever you have left over from these payrolls that you mapped out, and it may be less than 25%. So it could be that you're able to get 80% in with your payrolls and your staffing in that 8 weeks, and you only need to fill up the remaining 20%. Map that out as well. So map out those eligible expenses within the 8-week period, and then continue to evaluate it throughout the 8 weeks. So keep that schedule, use Excel, drop in the estimates, and as you actually incur those costs, replace the estimate with the actual dollar amount so you can gauge where you're at, where you're landing, to be able to maximize forgiveness. And so the documentation that will be required. So you will need to provide payroll reports and tax filings for the related 8-week period, as well as most likely you will need to be providing payroll documentation for the benchmark periods used to determine your head count and prior wages. That the lender and the SBA will probably want to know that there was, see that calculation, have those reports to determine that there was consistency. For utility statements as well, for any utilities that get paid, maintain those statements for the 8-week period, and also have some type of documentation to show that that utility was in place before February 15th. So that might just be, your January utility statement that has the same account number on it as your, June utility statement that was included in the PPP funds. Rent and lease agreements, so probably be wanting to see copies of those checks that were paying rent, or electronic transfer confirmations, as well as the actual lease agreement itself, that it was signed prior to 2/15. Mortgage statements for the 8-week period and prior to 2/15. Any retirement plan or contribution documentation, again, for the 8-week period, as well as prior to 2/15, since there is that requirement. Health insurance plan documentation and statements for the qualifying benefits that are included. And so for all of those, check copies and electronic payment confirmations will also be essential, and they'll be wanting to see those dates included, when the funds were actually paid, because so much of the requirements is based on paying out the money within this 8-week period. It's all based on the cash movement. Here are also some other suggestions on how to document use of the funds. So a lot of professionals have been suggesting to separate the PPP funds into a designated banking account, so that you have it, so that it's not commingling with your other business funds, and you can really clearly show that we use these dollar amounts for these specific purposes. So change your payroll draw account to that PPP account if possible, or otherwise transfer only what is being spent out of that bank account into your operating checking account, so that you have a transfer of that PPP funds to the exact dollar amount, leaving for payroll, leaving for rent, keeping that nice clean audit trail, so that you're able to prove that you actually spent this money on these purposes very clearly, and it doesn't get commingled at all. So the application process, what can you expect? Your PPP loan lender will be the ones processing the forgiveness applications. And so they're the ones who are going to be providing you specific guidance on what their application is going to look like, on what kinds of forms and documentation they're going to be wanting to see. And also they're the ones that are going to compile the information and assumptions to be submitted to the SBA. So they're going to pull it all together, they'll submit it to the SBA, and from there the SBA will essentially purchase your forgiven portion from the lender. And so your lender will provide you with their specific requirements for doing that. You can also note that upon submitting your forgiveness application, the lender is required by law to provide a response to you within 60 days. So you are required to get a response within 60 days, and it won't be longer than that. Another item to note with PPP forgiveness is the EIDL Advance. And so, you know, under the CARES Act, businesses can get both the EIDL Advance and loan and the PPP, that there's no exemption from getting both. And so for anyone that has received the EIDL Advance, it's important to note that the advance portion will be deducted from the forgiven PPP award. And so here's a really quick example of what that's going to look like. So if there was an original PPP loan of $100,000 and they were awarded $80,000 of forgiveness, that means the EIDL will be added out or kind of taken out of that forgiveness amount and added into the loan balance. So rather than having $20,000 payable back to the SBA, there will be $30,000 remaining in PPP liability after that advance is removed from the forgiveness award. So just another thing to be mindful of. Okay, great. So we've gone through a lot of things on PPP forgiveness, all the components, some of the nuances. I know there are still a lot of questions on how, you know, do I have to hire the exact same employee for the exact same position? Can I pay that employee more? Am I able to pay employees bonuses to kind of catch up on that 75% rule? And so we can talk through a lot of those scenarios as well in the Q&A section, because I'm sure there are a lot of specific questions on that, and we can go through it there. But, you know, we've looked at a lot of what we know the requirements to be, and a lot of these things are very clear. But as we've already seen, elements of this PPP loan are changing daily. We're given more guidance, you know, all the time. The SBA is updating their FAQs regularly. Things are becoming more clear, and some things are not becoming very clear. And so another change is potentially coming. So the HEROES Act is currently in the process of being legislated, and could potentially be bringing more changes to what we understand the PPP forgiveness and loan requirements to be. So this has been the world we're living in, constant changes on this PPP thing. So the HEROES Act has much less emphasis on the financial services policy as compared to, say, the CARES Act, which was very heavy on financial services. But embedded in the HEROES Act are some provisions and changes to the PPP, and it's intended to improve the existing PPP requirements. So some of those changes could be extending the 8 weeks to 24 weeks. It could potentially modify the 75-25% rule ratio and bringing that down to 50-50 or something like that. And there are also some other changes in there as well. And so we are kind of just waiting to see what that's going to look like, but it does not look like there will be any additional funding of the PPP through the HEROES Act. That they're not going to be funding the program more, but there certainly will be potentially some changes to it. And the House is voting on it today, and so we shall see what happens. So just keep an eye out that changes might be coming even more than already have under the HEROES Act. Okay, so moving on to what is, in my opinion, the fun stuff, the PPP accounting. And so we're going to dive into, you've received these funds, and now what do you do with them? Where do they go? How do I record them? There's a lot of different elements to them, and what's going to be the best way for me to do this in QuickBooks. And so with recording a PPP transaction, you are going to primarily have 4 components. The first, the initial receipt of funds, accruing interest, the forgiveness award, and then addressing the remaining loan balance if you have any, which we're hoping that you don't. Hopefully you qualify for all of these forgiveness determiners and you get 100% forgiveness. But in the event that maybe the full loan isn't funded back to you, we'll also look at how to address that. So the initial receipt of funds, this is going to be treated as a normal SBA loan until you are awarded forgiveness. And so record the receipt of the funds through a deposit, the actual money hitting your bank, and hit that against a long-term liability account, and create a new account for this loan so that you can track it separately. So I put in here an example of what that account could be named, something that will help you, your tax preparers and advisors, understand exactly what that amount is on the face of the financials. And so SBA, PPP, note payable, that will be really clear to anybody who's looking at your financials. And that's going to look just like this. So your deposit comes in, let's say you got $150,000, and we're going to be hitting that deposit against the note payable account. Next would be accruing interest. And so we all know that the PPP terms are 2 years at 1% interest, with the first 6 months of payments deferred. And so that means as of the day that money hits your checking account, interest begins to accrue. So as of the day that money hits your account, the 2-year clock starts ticking on those funds. And so we would, ideally, best in a perfect accounting world, we're going to want to accrue the interest during that 6-month period. And then upon forgiveness, the respective interest for the forgiven funds will also be forgiven. So that'll be an element as well to keep in mind as we're accruing the interest and recording forgiveness. So to book accrued interest, use a journal entry. You debit that interest expense account and then credit the note payable liability account that you set up. So here's an example of what that journal entry looks like. We're going to, increase the liability account and record the expense. And you would do that each month for that 6-month period. Now, recording the forgiveness award. So forgiven portions will be reclassified from a liability to income as of the date that you receive that award. And so the forgiven amount is tax-free, which is very exciting and which is great. So once you book the award, you're going to use that with a journal entry. And you're going to hit the note payable liability account as a debit and credit an income account. And so I've also given an example of how you could set up this account. I recommend creating a new account for this forgiveness, just so it's crystal clear to your tax preparer and your advisors where the money is on your financials. And so I've put here as an example, PPP Forgiveness, setting that up as an other income type and using the detail type other miscellaneous income. And so this is going to be recording the award. And so you can see here now what we've done is we're booking a journal entry. We are debiting the note payable for both the principal and interest components that were forgiven and hitting that full amount against an income account. So it's really clear on the financials where that money went, how it was forgiven, the day it was forgiven. So now also in recording the forgiveness award, we also need to account for the related expenses that were forgiven. So expenses covered under forgiven PPP funds are not deductible for tax purposes. So basically this makes this whole transaction a net zero. So the forgiven funds are not taxable, but you also cannot deduct the expenses covered by those forgiven funds. So at the end of the day, we'll net to zero for you and not impact your tax liability. So to do this, reclassify expenses as of the award date, or you can use year end if you don't want to throw off your ratios and you want to kind of isolate that using a journal entry. So debit the PPP excluded expenses account. So I would recommend setting up another account to kind of segregate out this activity, again, just making things clear and easy for your tax preparers and advisors. Create a PPP excluded expense account and then credit the respective expense accounts that were forgiven. So, your estimated payroll, rent, utilities, and mortgage interest. And it may be that you have to create an estimate of how those were allocated between the different expense categories if you end up having multiples. And, if it's not a 100% loan forgiveness, then you may need to kind of prorate that to each category. So there will be some, judgment on how that's going to look exactly. We're not sure what is going to be provided to borrowers as far as forgiveness, if they're going to break that out in the forgiveness documentation, or if we're going to have to kind of use estimates to record that activity. But regardless, you would credit each one of those accounts, reduce the expense, and allocate it to the excluded expense account. And so I put an example in here of what that account could be. One thing I would note and I would do is I would make this excluded expense account a sub-account of the PPP forgiveness so that the PPP forgiveness income and the excluded expenses net together right on the face of the financials. They'll still appear as separate lines, but with the PPP excluded expense account as a sub account, it'll net out nicely, and I'll show you what that looks like on the financials. So here's our journal entry. We would be crediting the various expense accounts, payroll, utilities, rent, as well as the forgiven interest that we've accrued. And so you're going to want to have a line in there for the forgiven PPP interest that we had accrued in those prior months, and then debit that excluded expense account. And so if all goes well, this is what your income statement would look like. So it would leave you with a net zero activity in the other income section of the income statement. And so this would be really nice and clean and clear for your tax preparer to understand exactly what happened when it comes time to do the tax return at year end. Having it segregated out here, they're going to be very thankful that you did this. And so from here, you can see it nets to zero. We tie out those numbers exactly to each other. We know that we've pulled out the expenses that now are excluded. So with this, some of us will be left with a remaining loan balance. And so using an amortization schedule, you're going to treat that loan as a normal loan, breaking out principal and interest with each payment. And so again, note here that the PPP term is 2 years, beginning on the initial receipt of funds. And so the SBA loan is automatically awarded a 6-month loan deferment, at which time interest is still accruing. However, it's the unforgiven balance will need to be paid in the last 18 months of that 2-year period. So I know a lot of our clients would think, oh, I'll have 2 years to repay whatever I still owe. Well, not technically. You're going to have 18 months to repay whatever you owe, assuming the loan terms do not change under the HEROES Act, which is completely possible. And so as of right now, this is what we know. All right, so we've recorded all these expenses, we put everything into the right spot, and this is what it should look like when it's all said and done. So this is the detail of the note payable account, and we see there the first line, the deposit of funds. Then we have 3 months where we've accrued interest, and then on August 20th, we received forgiveness, both for a principal portion and an interest portion. From there, we still have some deferment left in the loan. And so with that, we're going to continue to accrue interest during that first 6-month period until finally our payments start on month 7, where we're going to start breaking out principal and interest and then no longer need to be accruing that interest at that point. Alrighty, so I promised you resources. So we've referenced a lot of different authoritative documents, and in all of these webinars, as I said at the beginning, it's so hard to know what's true out there and what is actually authoritative. And so going to the actual source documents themselves will be so helpful for you to be able to stay up to date on what's going on. So here I have some helpful resources for you to be utilizing. The first one is the SBA and Treasury FAQs. And so here I have a link directly to the SBA website, and this is where they are updating the FAQs as new FAQs are added. And so like I had mentioned earlier, part of my morning routine is to log in here and see if they've added in any more documentation, any more notes. I looked this morning, they didn't add anything as of today, or as of me checking this morning, but this is a great resource for you to continuously be getting the most recent SBA FAQs, because they're very helpful, they're very easy to read, and would be very useful. I also in this webinar reference to the SBA and Treasury interim final rule. This details out a lot of information about the original PPP guidance and guidelines that were issued under the CARES Act. It's also it's pretty easy to read, and it's a great resource as well if you really want to go to the source document yourself and say, I want to know what this says, what the actual language and terminology is. And there are some also, some question and answers within that document as well that are really helpful. I've also been referencing the Treasury fact sheet. And so I've put a link here so that you can pull that up yourself. That has a lot of great information in it and is really helpful. I've also included in the reference here the AICPA recommendations. Now, this is not authoritative. The AICPA is an association, but they do, provide a lot of recommendations and insight to different, the Treasury and the SBA, and so they may very well be listening to a lot of what the AICPA has to say, and they've put out a sheet of their recommendations on the PPP. So I put that here as well. The AICPA details out their opinion on how some things should be calculated, and so that's also a helpful resource for you to be using. So please utilize these resources. Go straight to the source for what's available right now so that you can be informed. And again, thank you so much for having me. I'm Lexi Carell. We provide outsourced accounting and bookkeeping solutions to businesses all over the country and the world so that our clients can focus on running their business and doing what really matters and is important to them. So we're always, happy to speak, and I'm always happy to speak and talk with anybody. So I put my email here. Please feel free to reach out to me if you have any other questions or you want to just talk with me at all. I'd be happy to schedule a time with you. All righty, so with that, we are going to transition over to some questions.
Absolutely. And Lexi, thank you so much. Tons and tons of great information there and great insights. So we do have some questions that have been asked. We will run through these. A lot of them, I believe, will be fairly easy for you to answer for us. So we'll just kind of tee those off. And if there's any that we need to get an answer back at a later time, we can do that as well. So the first question, can severance pay be used in PPP funding?
Yes, so severance pay can be used in PPP funding. If you have to lay off an employee in that 8-week period, severance pay can be included in the 75% minimum.
All right, quick and easy answer. Can you further explain what the owner's distribution, guaranteed payments, what that is? And does this mean that the owner's payroll does not count, or does it mean something else?
Yes, great question. And so the PPP is designed and intended to protect paychecks, right? The Paychecks Protection Program. And so really the PPP is specific to W-2 wages. So if you as the owner have been paying yourself solely through distributions and you have not been processing that through W-2s, unfortunately, those distributions cannot be included in the 75% minimum requirement for forgiveness. However, if as an owner of the business, you have been paying yourself W-2 wages and you have been on payroll and you're kind of captured in those historic periods that we talked about in Q1 of 2020, as well as the 2 periods for calculating FTEs, then you can be included in the payroll. So if you've already been in payroll, you're the owner, you've been taking W-2 wages, you can also be included in payroll for the purposes of the 75% minimum.
All right, easy to understand there as well. For the paid sick leave, since we can use it simultaneously with the PPP loan, if it's after we use the PPP loan, can we use the tax deduction for federal sick leave? I'm hoping you understood that one. I can rephrase it if we need.
Yes, could you rephrase it? Just want to make sure I answer it correctly.
I think what we're asking here is about use of those tax credits under the FFCRA. And those obviously would be simultaneous with PPP, but not using the same funds. And then are the tax credits provided for leave provisions in the FFCRA still available after the PPP is closed?
Okay, yes, understood. Perfect. So you can simultaneously pay, use PPP funds and also be paying somebody else sick leave that qualifies underneath the Families First Act. And so they can be done simultaneously. However, you cannot claim both wages under both programs. And so it's one or the other. So there's no double dipping essentially in claiming those payroll earnings. Whether or not you can pay the same employee the same week out of both funds, that one I would not count on. I think that the spirit of these programs are that you're protecting normal payroll. And so anytime where there's an effort to maybe artificially increase payroll or things like that, I think that could potentially create a problem. And so the primary goal is to preserve the existing payroll at the existing rates for the existing employees. And so that is kind of the spirit of this law, though there isn't a lot of specific guidance on what that specifically looks like in a lot of situations. But when it comes to the PPP versus the Families First Act, you can still also continue to claim the employer retention credits under the Families First Act while you have PPP funds in that 8-week period and also after, as long as there's no double dipping.
Right, just making sure we keep those separate. So just a clarification request here. The employer portions of the state and local payroll taxes, state disability tax and unemployment tax, can those or can those not be included in the 75% calculation?
So the employer portion of state and local taxes can be included in the 75%, absolutely. It is just the federal employer payroll taxes that are excluded.
All right, perfect there. And this one's been asked several times, so we'll get to answer several questions all in one. When it comes to expenses, the 25%, can business cell phones be included?
To my knowledge, and again, this is not specifically detailed out, but telephone expense was included and added to utilities. And so, I think at the end of the day, the SBA and the Treasury, they're not trying to, they want this to be reasonable. So I think if you have reasonable proof to show that those cell phones are essential for your continued operations during the pandemic, and even during normal operations, that those are part of, your, lifeline and communication, then I'm sure you'd be able to justify including those as well. However, cell phones are not specifically included. They're also not specifically excluded from telephone.
Another one of those areas where we're wishing we had a little bit more defined guidance for sure. What happens if you have to replace someone who couldn't or wouldn't come back to work? Do the pay requirements translate directly over?
Yes. So if you're able to replace that individual, so if you issued a written request for a rehire and that individual declines, you can certainly hire someone else in their place.
Okay. Now this one I'm hoping is going to make clear sense to you. For the 25% wage decrease limit, what would we do for employees who were not working for all of Q1? Do you attempt to get a weekly wage amount or exempt them from the calculation?
Yes. In this instance, I think doing whatever's going to be reasonable will be just fine. So in a situation like this, I'd say probably take, if they had worked 4 weeks of Q1, then take what they were paid over 4 weeks and divide that to get your weekly allowable, minimum. That would be, in my opinion, probably the most reasonable thing you can do. And I think, bank and the SBA would agree. So in a lot of these, we don't have specific guidance for very specific situations, but at the end of the day, it's going to be just kind of stepping back and saying what's reasonable to a reasonable person. Does this make sense? And so I think in that instance, you're correct. Just take what you paid them for. If it were, 2 weeks, 4 weeks, 3 weeks, and calculate the average for that specific period that they were on payroll.
Okay. So this is an interesting question here. Can payments made for accumulated PTO be paid along with payroll and considered for PPP forgiveness?
That is an interesting question, and one that is also not specifically addressed. I would say for that situation, discuss it with your lender, because the lender is really going to be the one who is going to scrutinize, what was included, how were these, different levels calculated, and they're able to get direct guidance from, regional SBA offices. And so they can, if they have a specific question like that, they can even now go to their regional SBA office and say, okay, what about this situation, and help get some guidance. I would recommend doing something like that for that situation, because again, it's not specifically detailed out that you can, it's not detailed out that you can't. However, the goal of the PPP is to protect the existing wages, and not to necessarily pay employees more, or anything like that. And so I'd say go and speak with your lender on that specific situation. I think it will probably also depend on what your normal policy is on paying out PTO. If that's allowed under normal situations, if in your HR handbook, it says that that is allowable, then you're probably more likely to be able to justify it as if it's never been a part of your normal practice. But talk with your lender, and they'll be able to give guidance on that, because ultimately the lender is going to be the one that's really guiding the documentation, the assumptions that are going to be submitted to the SBA on your behalf.
All right, moving right on to our next one, and this one I know has been asked a few times. How and where do we apply for our PPP loan forgiveness?
Excellent. Yes, great question. So PPP loan forgiveness will be initiated through your lender. So whatever lender you used to receive the PPP funds, that is the lender where you will also apply for forgiveness. And so lenders should be reaching out to you with specific instructions and guidance on how that's going to happen. And so that's going to look different for each lender. Potentially they might have their own special unique form. But in my opinion, it's never too early to reach out to your lender and start asking for guidance on, okay, what is the form going to look like? What documentation are you specifically looking for, to see what they're going to be wanting? Because it's going to be driven by your lender. And so they will be the ones that you'll be submitting information to, and that will be documenting what you have. And so you're eligible to apply for forgiveness as soon as that 8-week period is over. So as soon as that 8-week period is over, you can begin the application process, and that will be directly through your PPP lender.
All right, perfect. Easy to understand there as well. Interesting question here. For the grace period to restore wages and FTEs through 6/30, how do we go about calculating this? And with a PPP loan that will be ending before 6/30, are we able to submit an initial forgiveness application and then amend it once the 30th comes around?
Yes, that is a great question. And I believe on that slide, I even noted that it's not very clear what's meant by the Treasury in that PPP fact sheet that they issued. And so we are waiting on more guidance as to what that means. And hopefully the HEROES Act will give some more guidance on that. But essentially, it does seem like there will be some consideration of what employment levels are for you as of 6/30. So if you're able to get it back up by 6/30, there will be some consideration of that in calculating your forgiveness. And so that's another great question to bring to your lender to see what they need, what their understanding is. And again, they can go directly to their SBA regional offices and ask for guidance, which is going to be a lot more authoritative too, for that your specific lender as they develop and formulate assumptions and documentation for you.
All right. Good advice there. And then this one, just kind of on that 75-25 guidance, healthcare costs. Are those considered a payroll cost and in that 75% of the PPP?
Yes. So insurance premiums for a group healthcare plan are included in the 75%.
Simple question, simple answer. Let's go a little different direction. For dealers that have included hazard pay, for folks who've worked through this, perhaps in an essential business, is that going to be part of the payroll that is forgivable?
Yes, so one of the descriptions of eligible payroll that was released in the final rule in the interim ruling from the SBA does state that compensation is, salary and wages, and they use the term similar compensation. And so what is meant by similar compensation is not very clear. So I know there's been some discussion, well, do bonuses fall underneath similar compensation and things like that? But it seems that hazard pay could potentially qualify underneath that similar compensation wording and could be included as well. And so if you have a reasonable justification as to why hazard pay is necessary, then you probably be fine. But again, speak with your lender for what their interpretation is.
Good guidance there, making sure we have a good understanding. This has come out a few different ways, been asked a couple different ways. Of course, we know that when we get back into the actual language, costs paid and costs incurred. So is the payroll forgiveness for wages paid during this time period, excuse me, is it going to be on what we pay or what's been worked? No, excuse me.
Yes, in my opinion, I think the safest assumption we can make at this point is it's based on paid. However, you may be able to provide a reasonable case that it should be based on pay period. And so again, it's not specifically detailed. You must use the pay period versus the pay date. However, you may be able to provide, reasonable cause that this should be applied to you, and that might be accepted by your lender and the SBA. Because again, ultimately, the goal behind the SBA and the Treasury and this whole program is not to make this an impossible ask of businesses. They want to be reasonable. And in some cases, we've seen them come out with valid concerns and provide very reasonable solutions and guidance. One of them being that necessity certification, where they provided that safe harbor for, businesses receiving under $2 million. That, to me, that shows a lot of, effort on the SBA and Treasury side to make this a reasonable program. And so I don't think they're going to necessarily get, if you have reasonable cause to show that you try to be in compliance with all of these rules to the best of your ability, I really think they're going to take that as I think they'll be reasonable with that. But again, to discuss it with your lender, because it's not specifically stated one way or the other. So a lot of it is up to interpretation, and your lender will be able to give you a lot of guidance on that. But in my opinion, the safest thing that you could go by would be the pay dates of those payrolls.
All right, so keeping track of both ways and making sure we have all that on hand. This is a very interesting question here. If we don't end up using 75% of the total amount we received for payroll, is the amount that can be used for expenses such as rent or mortgage interest still 25% of the total PPP funds received, or 25% when you factor it in proportionately to what's used for payroll?
That is a great question. Yes, and my understanding of the language would be that you're still limited to just 25% of the total PPP funds. So if you're not able to hit 75%, it does not then prorate that reduction against the 25. For purposes of the loan. However, it will impact your forgiveness amount. And so that would be something to factor in.
Absolutely. We spoke about severance earlier, and there was a follow-up question there. If severance pay was for an employee who left prior to the loan, can we still count that in the loan? I'm assuming asking here, if it's paid during those 8 weeks, even though they may have left prior, would that be acceptable to apply for PPP funds and forgiveness?
Yes, I would agree with that. That yes, if because the language says that payroll costs are considered, and specifically in there separation wages. And so whether or not that was an employee separated during the 8 weeks or prior, if it was paid in those 8 weeks, it's considered a payroll cost.
All right, we've got time for one more question, and this one's very interesting in just the understanding of this. The attendee who asked this, their company received PPP money. They also received EIDG money. Can you share with us the difference between the EIDL and the EIDG?
Yes, so the EIDG would be the grant component. And so that in the PowerPoint presentation, I use the word EIDL Advance. And so the advance and the grant are the same thing. So essentially it's viewed as a tax-free money given to you as a business grant. And so that would be still, it would be added on or removed from the forgiven portion of your PPP loan. So if you received the grant or the advance, whatever amount that is will be removed from any forgiven PPP. So you essentially just add that on to your PPP loan after receiving forgiveness.
And that will, of course, as you said, I want to make sure we're clear on that. If you did get that grant portion, that does impact the forgivable amount of your PPP, correct?
Yes, exactly. Yep. So in our example, I think we had $100,000 PPP loan with $80,000 forgiven, but a $10,000 advance or grant had been received through the EIDL program. And so that means rather than 80% being forgiven or $80,000 being forgiven, you're actually only going to be forgiven 70 because they're going to factor in that advance or that grant that you had received.
All right. So certainly great information. And thank you for taking the time to work through those questions. For the members in attendance, if you have other questions, you are still welcome to send those to us. ask@nationwidegroup.org. We have a team that's manning that daily, and we will get answers back to you. So we would like to say again, Lexi, thank you so much for sharing your experience, your expertise, and the great information that you shared with us today. To Tyler, thanks so much to you and to Intuit for putting this together. Wonderful service to members here. If you have questions about Intuit, about their suite of products and services, if you'd like more information on QuickBooks and those related programs, we will make sure that you have Tyler's information available through MemberNet, and we'll also be following up with you after this webinar so that everyone can receive a copy of the video from today's webinar, as well as the presentation if you'd like to go back and make any references there or go back and double check anything. So again, thanks so much for spending some time with us this afternoon. We certainly hope that you found this webinar to be valuable. We do look forward to seeing you again soon. And on behalf of your entire Nationwide team, have a wonderful day. We hope that you, your family, and your teams are safe and doing well, and we look forward to serving you again soon. Have a great day.